Welcome back to Fast Market. I'm Alex Coffey alongside Kevin Hinks. Quick check on the market as things are a little bit choppy, but for the most part, hanging in there. Kind of a quiet morning. We do have red on the S&P 500, down about 3.7 points here. The NASDAQ a little bit weaker, down 11. The Dow down 40. The Russell holding in there, up 10. So largely where we left it, but we'll periodically check in on, of course, one eye on the market at all times. But for now, it's time for our cash tag segment. Joining me here is TD Ameritrade Network contributor Jenny Horn, and from LikeFolio.com, the VP of Research Megan Brantley is with us as well. Today, Jenny, we're talking about Kohl's ahead of its earnings release. It's been a very, very busy retail week, and so I'm looking forward to this one. Does it go the way of TJ Maxx, or does this one end up looking a little bit more like a Walmart or a Target?
Yes, and that's a good question. And what I think is a little bit different for Kohl's is, of course, they don't have this grocery offering that Walmart and Target do, but they are up today over 2%, and they have seen some pretty crazy price activity over the last year. So they're up about 30% year to date. But remember, last April, they were actually down about 80%. And since April of 2020, the stock has climbed over 370%. So talk about sort of a rebound and a recovery story. Now, actually, they have earnings pre-market tomorrow alongside Macy's, so I kind of grouped these all in this department store sector. And Tesla Advisory actually raised their price targets on both companies ahead of their reports, but noted that investors should potentially not buy the shares, which to me is a huge red flag then, of course. She does expect better than expected results from these companies, but doesn't see as strong of a case for recovery in retail as so many other analysts said. So I thought that was important to keep in mind as we've seen sort of a mixed bag from the market in terms of reacting to some of these retail earnings this week. So ahead of this report, Kohl's is facing a concern with sort of wage inflation and also supply chain disruptions, which is something we've seen really across the board, but it does have some strength, and it sort of operates in this, I think, sort of unique way where it's actually benefited from growing its digital business, which of course every retailer has, but their mobile traffic has increased mainly because of the adoption of their app, which is something I really don't hear with a lot of the other retailers, which it's now actually a huge driver of its online sales. During its first quarter, the app actually accounted for 1/3 of its digital sales. And I can't really imagine shopping, at least for, goods on an app, because I'm just so computer driven, but that is interesting that it's actually led to double-digit user growth for Kohl's. Now, if anyone can remember, what really sort of sparked interest in Kohl's over the last few years was its partnership with Amazon, where you could go return your products at Amazon, and that sort of got people in the door, and we actually saw an impact on foot traffic from consumers because they sort of, came for Amazon returns and would maybe stay to shop. Now, our first tweeter highlights on that and is actually in response to another tweet which showed a line waiting for people to return their Amazon products at a Kohl's, and people were very unhappy with sort of the customer service experience, which is what our first tweeter today is responding to, which says, is this magic for Kohl's or Amazon? Amazon's return policy from your home is so carefree. I don't know why anyone would take it into Kohl's unless they were bored and looking for something to do or lived right next to a Kohl's store. So I thought this was really interesting because a few years ago, Kohl's was sort of the best way to return your Amazon products. It was usually free and you didn't have to sort of wrap up your products. But now with Whole Foods, you can go return your Amazon products so much more seamlessly, or there's Amazon drop-offs. So I wonder if this current quarter, or just maybe in a long-term trend, this will have a material impact on Kohl's, with people just having less of a reason to go make their Amazon return at a Kohl's. But another partnership they have sort of ongoing that is now starting to unfold is their partnership with Sephora. So that brings me to our next tweet, which says, I think Ulta going inside Target is amazing. Sephora going inside of Kohl's, on the other hand, is, and that is like a very unhappy looking emoji. So I think that this partnership is actually a very good thing for them. And I actually think that people were sort of surprised because, Megan, Sephora is, I think, typically associated as more of a luxury brand. So that's what's really interesting here, is that I think this partnership surprised a lot of people. But I do have to say the noise on social media regarding this Sephora partnership is positive now that it's sort of unfolding. But I do think Kohl's at least still lags a lot of these other sort of big box retailers via your data, correct?
Yeah, you're exactly right. And I think that you picked some really good tweets to highlight just kind of the overall chatter that we're watching whenever we look at social media. Whenever you compare Kohl's to its competitors, say from a happiness perspective, we're looking at a lot of different types of competitors here because you could kind of pit Kohl's against a lot of different type of retailers. But when you look at them, you can see on this chart right here in terms of consumer happiness, they're higher than Macy's, but they're lower than pretty much everyone else. And so I don't think that having a higher consumer happiness than Macy's is necessarily something to brag about at this point. However, you can see that it's kind of in a different league versus the Dillard's, versus the Nordstroms, even Target and Amazon. If you were to plot TJ Maxx on this chart, it would be higher, I believe, than Nordstrom as well. So, this is something where Kohl's happiness definitely is just lagging peers, and this has actually improved in the past year, but it still continues to lag comparatively. I think that this improvement is, that's positive, that we've seen it improve a couple of points. However, the fact that it's still not competitive versus these larger names that, maybe consumers, they just have other places to turn rather than Kohl's. And so I think that that's kind of the resounding theme of Kohl's is kind of the fallback of if you don't have anywhere else to go, or if it's just convenient, it's not something that you're necessarily seeking out.
The lack of love out of you two fine ladies about Kohl's is very sad. It makes me sad. Now, Jenny, I have a question. We have brought up on this show before that Sephora and Kohl's don't look like a mix, right? We think that Ulta and Target is a perfect mix. We don't think that Sephora and Kohl's is a mix. But you know where Sephora was before Kohl's? JCPenney. That's even worse.
It is.
Of a miss.
It is even worse.
It's even worse. So for all we know, Sephora may be coming back closer into line. And Megan, though I agree with your data that, looking at the happiness, Amazon, Dillard's, JW Nordstrom, Target, Kohl's, Macy's, if I'm Kohl's, I'm thinking, wow, we're right on their tail. We're just a little bit less than them. I actually think this is positive for Kohl's because I would have expected it to be much less. I'm looking for answers on both these subjects from you guys.
I think that you make a good point in the fact that Kohl's is making improvements in their consumer happiness. And so because of this, heading into this earnings event, whenever you look at how we kind of break out our earnings scores, we have a little bit of a mixed signal for Kohl's because their happiness is improving. So that's something that could be perceived as positive, although comparatively, I still think it, definitely room for growth here. But from a demand perspective, that's where we're really seeing some weakness. In the quarter that's about to be reported, we just aren't seeing anything riveting out of consumers. And so this is kind of one of those things where you have an instance of you have fewer consumers talking about the company. And so the base that is remaining is more loyal. So that kind of works hand in hand there, but it is a bit of a mixed signal. I think on the positive side of things, you can see on that shaded bar on the right, we are starting to see some traction, especially with these back to school shoppers. I know that Target made a nod to, a really strong back to school season on their earnings call. And this is one thing that we're seeing. Kohl's back to school specific mentions are up about 20% year over year. So there definitely is some, positive momentum on that front. It's just, will it be enough? Is it anything resounding? According to our demand data, there just isn't this huge turnaround stories for Kohl's.
Yeah, and I think the comparison sort of here with Sephora, Megan, my thought is at least I think that Kohl's I typically associate with lower costs. You go there if you're looking for a deal. Same way, maybe more of this discovery element of the shopping experience. Whereas, say, Nordstrom, you're not looking for that experience at all. You're buying a full price, typically more expensive item. So that's what confuses me about the Sephora partnership. To Kevin's point, is I just feel like Sephora is a very high price sort of beauty company that I don't necessarily see someone going into Kohl's willing to pay those prices. So that's to me where the disconnect is. But I do have to say, based on your data, your consumer happiness data, I noticed that Amazon leads with 70%. Now, Kohl's is second to last, but does have 66.5%. So relatively speaking, these are all very close in the pack, correct? Because I think that's sort of worth noting. I know they are second to last on the list, but only being about 4% behind Amazon in terms of happiness. That's something that shocks me.
Yeah, I think that one thing to keep in mind here too, that isn't necessarily visible on just this happiness bar chart is the size of these. If this were to be a scatter plot, how big would those circles be? How many consumers are talking about shopping with these companies? And Amazon would dominate. The size of that circle would be extremely large, much larger than Kohl's. And the fact that they're able to keep a much larger consumer base happier, I think that's where this becomes impressive. Whereas Kohl's has a much smaller sample size. And as you can see from our demand data, it's starting to shrink just across the board. So I think that that's something to monitor moving forward. But it is one of those things where, heading into this specific earnings, we do have a little bit of a mixed bag here because we have happiness heading kind of one direction, but then we have demand heading the other.
Megan, as someone who doesn't necessarily frequent these type of stores, the discount kind of retail stores, a Kohl's, a TJ Maxx, I believe you brought up, I believe falls into that camp. Of course, a Nordstrom Rack as well. Does Kohl's just have a more negative perception, or is that just my own experience and my remembering of this? And is that even isn't it the same experience depending on which one you're at? And does Kohl's not have kind of this Walmart effect the same way Walmart does to a Target?
I think that Kohl's does have somewhat of a stigma attached. I think you can kind of feel that in the tweets. You can kind of feel that just in the way that we've even been discussing the retailer. It does have more of a discount feel. One of the big drivers that we've monitored in the past is this whole concept of Kohl's Cash. And so people, using this currency or this rewards currency to make future purchases and things of that nature. We've seen these mentions of this Kohl's Cash that's up about 16% year over year. So there are signs of positive traction, that there is a consumer returning to the store, returning to Kohl's, which is good news for Kohl's. Mm-hmm. It's just a matter of, is this going to be long-term a winner? Based on our data, we're just not sure. We don't have that building demand that we'd like to see, and it's not building at the same level as other competitors. So for this earnings event, our score right now is exact as 7. That's very, very neutral for us. So we're sidelines for this earnings event, and if we were going to look at a name to follow longer term, I think that there are other more promising names in our universe that we're following.
Sounds like that basically highlights everything that I would have to ask. It's not a best in breed within its space. There's some question marks long term, and nothing sticking out around the earnings event. But Megan, neutral is a strategy as well, so we'll take that information, and we appreciate it as always. The VP of Research at LikeFolio.com, Megan Brantley.